Well, hello and welcome to Business 360. I'm Ashmit Kumar, and here are the headlines that we're tracking this evening. Stock markets tread with caution across the world ahead of US Fed's rate decision. Sensex and Nifty end with minor gains. CNBC survey shows Wall Street is expecting a 50 basis point rate hike tonight. Finance Minister promises to stick to the fiscal glide path, tells Parliament government will achieve 6.4% fiscal deficit by FY23 and is on course to achieve 4.5% deficit by FY26. BSNL to get more than 60,500 crore rupees through the supplementary demands for grants. 17 opposition parties walk out of Parliament in protest after being denied a discussion on the rising tensions with China. Sources say old videos of Indian and Chinese forces clashing at the border are circulating on social media. These videos are not related to December 9th clash in Arunachal Pradesh. Senior government officials say that the FIR into the AIMS server attack highlights that the hack originated from China, adds that 5 physical servers out of 40 were successfully infiltrated. Officials say that the data in the servers have been retrieved as of now. Paytm approves a share buyback proposal of up to 850 crore rupees, fails to cheer investors. The maximum share price fixed at 810 rupees, a 50% premium, offers little solace. The company says it expects the process to be completed within 6 months. The stock slumps 3%. United Nations agency ICAO refutes SpiceJet's claims, clarifies that its visit to operators was not to audit or inspect, but to verify the effectiveness of Civil Aviation Authority's safety oversight. SpiceJet had previously claimed that an ICAO audit had found its operations, systems and safety processes to be in order. The bankrupt crypto exchange FTX committed old-fashioned embezzlement, says John Ray, the new CEO, appointed to resurrect the company in a 4-hour hearing before the US. Lawmakers, FTX founder Sam Bankman-Fried is staring at more than 100 years in prison if convicted for fraud. Infosys co-founders gather to mark 40 years since its inception. Nandan Nilekani, who is currently the non-executive chairman of Infosys, says he will pass on the baton to someone who is not among the co-founders of the company, wants Infosys to be a no-drama, high-relevance company without bureaucratic cholesterol. Well, let's begin with the day's trading action. The Wall Street ends the day with minor gains ahead of the US Fed's outcome. Nifty and Sensex ended 0.25% higher. Banks led from the front, with that index posting a record close for the second day in a row to rise above the 44,000 mark. Mid-caps also outperformed. Prashant Nair is joining us now with the day's market action. Prashant, over to you.
Well, the market ended not with a whimper, but not with a roar either. The market was looking much stronger early on. Mid-session, it looked strong, but did come off quite a bit. The Nifty ending with just about 0.25% odd in terms of gains. Banks, which have been the stronger of the two indices, also came off and ended only marginally higher. PSU banks, no problems, even they continue to march ahead. Although what is leading that pack is maybe the lower quality names within the PSU banking space. Otherwise, I mean, sectorally, there was not a problem, except FMCG. Most sectors were higher, gains coming through in real estate, metals, and the IT services space, which with the second day bounced a little bit. Some stability returning, especially in mid-cap names. I'll get to stocks. So the Nifty gains coming through in names like Eicher Motors, Tata Steel, Tech Mahindra, State Bank of India, IndusInd Bank, and a few others. Cuts in FMCG, as I said. HUL was down. You had SBI Life and Ultratech, which also gave up some of those gains. Broader markets, lots of action and advances far outnumbering, losers. Mid-caps and small caps did do very well. UCO Bank, RBL, Suzlon, PNB Housing, GICRE, TV18 Broadcast, Punjab and Sindh Bank, and a whole host of other names. And we're only kind of going through the top volume-led gainers that we had today. Losers also, Yes Bank has had a fantastic last couple of days. That ended lower. Page Industries was down, Colgate was lower, and names like Reddington, which have seen a decent run-up, lost a little bit as well. Neither here nor there. Tonight's session in the US will be important because of the Fed decision, and I think that sets the course, sets the tune when we return tomorrow. Back to you.
Well, the big figure that the global markets will be watching for, the U.S. Federal Reserve will be announcing its final rate decision for this year later tonight. Now, as per a survey conducted by CNBC, the market is bracing for a 50 basis point hike in benchmark rates. What's crucial, however, is Fed Chief Jerome Powell's post-conference commentary and their projections going forward. CNBC's Steve Leisman gets us the highlights from the latest CNBC Fed survey.
The Fed is seen hiking 50 basis points at the meeting this week and adding another 75 next year, and causing what 2/3 of the respondents to the CNBC Fed survey believe will be a recession. But there is a small contingent, we'll look at that in a second, that's optimistic a contraction of the economy can be avoided. Here are what we call the Fed expectations. 50 this week. The new rate is going to be 4.25 to 4.5. The peak rate is seen at 5.15. That's higher than the Fed funds futures market. So this group of 34 folks think they're going to be a more aggressive Fed. The final hike comes in April, and then the Fed cruises at that speed, at that rate for 9 months. Here's the outlook from this group. 388 now goes to 438. That's between 4.25 and 4.5. 5.15 is the peak rate. And then some adjusting going on towards the end of the year, and maybe some rate cuts through 2024, ending at 380 for December 2024. Here's the recession outlook. 61% think there's going to be a recession in the next year. The average start date is in June of 2023. That is, by the way, 2 months later than the prior survey. And we've seen that in some of the Wall Street forecasts, pushing it down the road. Average length is a pretty long one, 15 months, with 67% believing it will be moderate, and about 33% think it's going to be mild. Here's the GDP outlook, and you can see 2 quarters of negative growth built in Q2 and Q3 of next year. Again, that's a quarter later for the 2 negative quarters there. But here's a little bit of optimism here. Does the Fed tighten too much, we ask, and cause a recession? That's 59%. That's down from 71%. Is it just right? And there's that contingent of optimists right there. 24% think the Fed gets it just right. That's up from 9%. It had been higher in the past. And does the Fed tighten too little and not get inflation under control? 15% down from 20. So a little bit more optimism in there. Recession, though, remains the base case for most of the 34 respondents.
Well, the markets will be on tenterhooks. A quick programming reminder: get the CNBC edge on the FOMC decision. Our coverage on the crucial Fed decision starts at 11 tonight. Well, back home, Finance Minister promises to stick to the fiscal glide path. She told the Parliament that the government will achieve 6.4% fiscal deficit by FY23 and is on course to achieve 4.5% deficit by FY26. Government-owned telecom company BSNL will get infusion worth 60,575 crore rupees by the supplementary demands for grants.
Fiscal deficit was estimated to reduce from 6.9% of GDP in the last year's RE to 6.4% of GDP in the current year's BE. This is very much in line with the government's commitment to achieve fiscal consolidation announced in the budget of 21-22. That is to reduce the fiscal deficit to a reasonable level till 25-26. And the current situation also very clearly gives me that kind of a feeling that we'll be able to comply with what we have said in the budget. Inflation has come, and it is now come down, and it is now in the tolerable band of the RBI. Inflation has been declining since April 2022, and it is declining further. CPI for November 2022 came down to 5.88% year on year, down from 6.77 in October. So I want that taken cognizance of.
The board of 197 Communications, which owns Paytm, has announced a share buyback proposal of up to 850 crore rupees. Abhishek Kothari now joins us. Abhishek, take us through the contours of this plan and tell us also how the investors are looking at it.
Well, Paytm has announced buyback amounting to about 850 crores rupees. So this forms about 10.24% of the fresh issue that they did last year in November, and about 9.26% of the cash and cash equivalent that they have in the balance sheet, which is about 9,180 odd crores. So the maximum price for buyback that they have mentioned is 810 per share, which is a discount of more than 62% to the IPO price of 2,150 per share. The buyback forms about 1.62% of the equity. The minimum buyback that they have announced is 50% of the amount, which is about 425 crore. The method of buyback is open offer. Now, this is against the tender offer that was on radar of many analysts to be completed in 6 months time frame with respect to timeline being given for the buyback. The total cost, including all the expenses, would be about 1,048 crore for the company. Back to you.
Action now from the aviation space. United Nations agency ICAO has refuted SpiceJet's claim, clarified that its visit to the operators was not to audit or to inspect, but to verify the effectiveness of the Civil Aviation Authority's safety oversight. SpiceJet had previously claimed that an ICAO audit had found its operations, systems and safety processes to be in order. More from the aviation sector. The impasse between Jet Airways lenders and the Jalan Calroc consortium continues, with both sides approaching courts seeking action. The JKC has moved the NCLT seeking transfer of ownership of the airline. However, banking sources tell CNBC-TV18 that the ownership transfer will only be possible after JKC makes first tranche of payments to the creditors. 1, 2, fulfills the conditions precedent, and 3, complies with the NCLAT order. Madiha Mujawar is joining us now to tell us more about this standoff. Madiha, tell us what's happening before the NCLT.
Well, both the lenders and the Jalan Calroc consortium are communicating their stances through NCLT and NCLAT. Let me first tell you about JKC's plea before the NCLT. The consortium is seeking two things: transfer of airlines ownership, and second, making ownership transfer date as the start of the 180-day deadline to pay creditors. Now, in a separate appeal, lenders have moved the NCLAT, urging the tribunal to expunge its observations made in an order passed on 21st of October. The NCLAT had observed that Jalan Calroc consortium have met conditions precedent committed in the resolution plan. Lenders have told the tribunal that if this observation is not deleted, it will put the lenders to irreparable harm, loss and injury. The lenders have also clarified to the court that JKC has not met all the conditions precedent. We asked banking sources on what lies ahead for the relaunch of the airline. So they are saying that there are differences, and they say that the ownership of the airline will only be transferred after JKC makes the first tranche of payment and fulfills all the conditions precedent. Now, sources say that lenders have never stopped JKC from infusing funds into the airline, but JKC has itself failed to show it has the funds for infusion. Sources also say that JKC wants to use 300 crore rupees received by Jet as rent from Air Serbia and others as working capital. Lenders have opposed their demand as they feel the money belongs to the lenders and not JKC. They want JKC to infuse its own money for working capital. Lenders also say it's a loss-making situation for them, as they also have to pay 250 crore in airport dues after the first tranche of payment is made.
Right, Madiha, thanks a lot for that. So this is an issue which continues to get argued and debated before the courts. NCLT will have the final say. Meanwhile, Infosys co-founders gather to mark 40 years since its inception. Nandan Nilekani, who is currently the non-executive chairman of Infosys, said that he will pass on the baton to someone who's not among the co-founders of the company. Details when we come back. Welcome back. Now, it's been 40 years since the inception of Infosys. The OG of Indian startups, N.R. Narayana Murthy, along with 5 others, started the company in 1982 by borrowing 10,000 rupees from his wife, Sudha Murthy. Now, Infosys is valued at more than $16 billion. The founders of Infosys gathered in Bengaluru to mark the 40th anniversary. Shireen Bhan spoke to the founders as they took a trip down memory lane. Nandan Nilekani, who is currently the non-executive chairman of Infosys, says he will pass on the baton to someone who is not among the co-founders of the company. Nilekani, meanwhile, wants Infosys to be a no-drama, high-relevance company without bureaucratic cholesterol.
I do have this huge responsibility because going back to his phrase of 2006, I'm the last of the jokers left.
Do you miss having the other jokers around?
Oh, yeah. It's no one to talk to. I only talk to Salil, but Salil is so busy selling that I can't talk to him also. So I think my challenge is a little more acute because, since I have some founder's clout and all that, I can do some. But I'll be handing over to a chairman at whatever point that I exit from the scene, who will be the first, not the first, but a non-founder. And now there's no plan B now. If I hand over to somebody and it doesn't work out, there's no plan B. I can't come back at some 75 or something. So, and I don't think any of these guys want to come back either. So
maybe we should ask them.
You can ask them. Maybe they want to come back. They haven't told me. So anyway, I think so there's no plan B. So I have to make sure that when I exit the scene, I implement his vision of putting in place the leadership structure, people, and with the right values to take it forward. So that's really actually the biggest thing on my head.
And that's a serious issue. And I want to get you to comment on what you just said, Nandan, because as you pointed out, you said there is no plan B. In light of what has happened previously, what is it that you believe needs to be put in place to ensure that you get it right? Because this has been a challenge. Let's be clear about that. And secondly, do you believe that in hindsight, and I want to ask each one of you, and Mr. Murthy, I want to ask you as well, that this hard coding that at 60 you need to move away, at 60 you need to retire, at 60 it is the sunset. Do you believe in hindsight today that maybe it should have been different?
No, look, if not 60, maybe 65, all that is fine. But look, at the end of the day, we're all mortal, right? We're not going to be around. And that's one of the reasons why we're having the 40th is we don't know whether they're there for the 50th. So, really, seriously, I'm not joking. Let's get this done because I don't know what's going to happen 10 years from now. So you have to, how do you create institutions that outlive you? How do you create institutions that cross generations? How do you create institutions that move from an ownership model to a totally professional model? In fact, when we first began, Murthy said, we will be the ultimate professionals company. I remember our first tagline was professionals company. But what you realize now is that, you need to have a combination of, professional ownership, all that stuff. So I think it's not clear to me what's going to happen.
It's not clear to you what's going to happen. That's not very reassuring to hear.
No, I haven't found yet a person whom I can hand off to. Let's put it that way.
What is the timeline that you're giving yourself?
I'm not going to talk here.
Okay, all right. I tried.
Well, to news now that's making international headlines. U.S. President Joe Biden has signed a bill into law which mandates federal recognition for same-sex marriage. Now, Biden said that the law and the love it defends strikes a blow against hate in all its forms. The bill signing at the White House was attended by prominent LGBTQ community members and their allies. The bankrupt crypto exchange FTX committed old-fashioned embezzlement. That's the word coming in from John Ray, the new CEO, appointed to resurrect the company in a 4-hour hearing before the U.S. lawmakers. Now, FTX founder Sam Bankman-Fried is staring at more than 100 years of prison time if convicted for fraud. Silvana Henao now joins us with the latest. Silvana, tell us, what are you picking up?
Sam Bankman-Fried remains behind bars in the Bahamas this morning after the magistrate overseeing his case there denied a petition by Bankman-Fried's legal team to set bail at $250,000. Now, the court calling the disgraced FTX founder a, quote, great flight risk, ordering him to remain in custody until at least February 8th. Now, this comes after U.S. authorities officially charged Bankman-Fried with 8 counts, including conspiracy to commit wire fraud on customers and lenders, money laundering, and violations of campaign finance laws. When asked if more charges against other FTX-connected players are possible, U.S. Attorney for the Southern District of New York, Damian Williams, said his team is not done yet. Bankman-Fried faces decades in prison if convicted. As Bankman-Fried's future hangs in the balance, so too does that of FTX. On Capitol Hill yesterday, the firm's new CEO slamming the company's lack of oversight and lack of controls in the front of the House Financial Services Committee.
This is really old-fashioned embezzlement. This is just taking money from customers and using it for your own purpose. Not sophisticated at all. Sophisticated perhaps in the way they were able to sort of hide it from people, frankly, right in front of their eyes. But this isn't sophisticated whatsoever. This is just plain old embezzlement.
Brian, and it's day 2 of the hearings, and they will be taking place in front of the Senate Banking Committee today.
And well, before we wrap, Sunita Reddy of Apollo Hospitals is the guest this week on our special show, Medicine Box. She spoke to Ekta Batra from Apollo's flagship hospital in Delhi, NCR, about occupancy rates, revenue growth, and more. Take a look.
Last quarter, it was at 68%, and we did have a lot of fevers also. But the important thing about Apollo is really one, a denominator has changed. So we have a 9% increase in operational beds. So therefore, you have to keep that in mind when you look at occupancy. I think the second most important thing is that our ALOS has moved from 3.78 to 3.4. And therefore, our asset utilization and absolute number of patients have grown by 19%. So that, these figures on occupancy will keep changing, but these are the levers that we use.
But any kind of guidance that you have in terms of what your target occupancy would be, where do you want it to sustain? I think it's around 70%.
Yes, you're right, it's around 70%. And I think with this level of ALOS and the current case mix we have, this is, it will generate a lot of free cash flow.
But this case mix, one of the views is that complex surgeries have increased quite significantly because the awareness is greater. So in terms of your case mix, is it much more complex as compared to pre-COVID?
So at Apollo, we've always focused on our COEs, Centers of Excellence, which are cardiac, orthopedic, neurology, transplants, robotic surgery, and a lot of general surgical work and mother and child. So as we look at these specialties, there has been a tremendous increase. So if you take oncology, for example, when we started our investment cycle, we were at 800 crores of revenue. Then we invested in the proton, which really no one in Southeast Asia had done. And hopefully we should close the year with 1,700 crores of revenue coming from oncology. But the premise of all this, the base of all this is that our clinical outcomes should be the best in the world. And therefore we attract the talent.
And with that, it's a wrap on this edition of Business 360. Thanks so much for watching. Stay tuned to CNBC-TV18. The news and updates continue right here on the other side.